Welcome to another Financial Tip Friday. My name is Scott Marks, financial advisor in our Scottsdale office. Today I want to talk about a concept called tax buckets. We've gotten a lot of questions from a lot of clients over the years just asking, hey, what's the best place for my money to be going into my retirement? And there's effectively three tax buckets, right? The first bucket is your pre-tax dollars. These are funds like what you would divert into your 401k. So if you think about all that money that's being diverted from your paycheck into your 401k, all of that gets taxed at some point in the future. Now, it's not a bad thing. If you're earning more today than you will in retirement, in a lot of cases, it makes sense for us to defer those dollars into that pre-tax bucket. The second bucket is our post-tax bucket. So this is money like what's in your bank account or in your brokerage account. This is money that you pay taxes on as it grows or as you realize the gains in that account. In some ways, that's a less efficient way to invest than having the money in your 401k because of the fact that the 401k is tax deferred until you pull it out, whereas the post-tax dollars, of course, you have to pay taxes on those along the way. But the nice thing with those post-tax dollars is we can get access to some of those in retirement as a return of capital or a return of the money that we've already invested. The final bucket, the third bucket, and I think the best bucket is our Roth bucket. So this is money that will never be taxed again. It's already been taxed on the way in. Either you converted money from an IRA, you funded a Roth directly, you funded a Roth 401k directly. This is funds that have been taxed. They get to be tax deferred inside of the Roth, and then they're tax-free upon withdrawal. And that can be a huge advantage in retirement. So when we think about retirement planning as a general rule with all of our clients, we try to go and create a balance between those three buckets. If we can come into retirement with a third of our money in the pre-tax bucket, a third of it in our post-tax bucket, and a third of it in our Roth bucket, it gives us a lot of flexibility for tax planning in retirement. Unfortunately, it's more common that folks end up retiring with a very large portion, maybe 90% in the pre-tax bucket. So it limits the amount of control we can have over the amount of taxes they pay in retirement. So if you're in your 40s or 50s or even your 60s, it may make sense to be considering filling up some of those other buckets so that we have a little more flexibility in your retirement. Thanks for joining us again. If you have any additional questions about these buckets, we're happy to talk further. Feel free to reach out to one of the advisors here at Summit.